Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, April the 5th. The year's 2024. Let's talk trading. Weekly wrap-up, NFP Day with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, we got another low-range day, but it's NFP Day, so we are looking for some action.
Hopefully we'll get some. We got a few more pips than we had yesterday at this time, but not very many. We got 34 pip range for the day, and yesterday at this time we had 26. But good grief, talk about the market being compressed. But you know what happens with springs that are compressed, right?
Yeah.
eventually, the hook comes off and it goes flying.
Well, let's see. We're below yesterday's high, and we're below Wednesday's high. We are right below, I believe, last Friday's high. So, and that's at 26.44. So right now we're in the launch pad.
Yeah, we're set up to take off. That's for sure.
And
will it? Will it? I don't know.
Yeah, we're less than or about 40 seconds away from the announcement, so I guess we just sit, wait, and see what happens.
Yep. For me, anyway, because the way they've changed things around and whatever, I think it's a fool's game trying to go and predict what it's going to do. And, the old straddle methods on both sides, they don't seem to work as well anymore. Although I'm surprised my spread is only 2 pips right now.
Mine's just went about to the 3 range with 5, 4, 3, 2, 1. Here we go. NFP. Ooh. Whoa, it dropped.
Oh, look at that go.
Now we got 40 pip range on the day.
42 pips, yep. We set a new low for the day, which wasn't hard to do.
I've got 45, 49, 51. Are you going to look for a bounce, or are you going to look for a continuation?
I don't know, because, it's call me crazy, but I don't try to predict those things. What I do is I go and look at the candles and I trade what the candles tell me to trade at that time. Right. So I go into it unbiased. I know a lot of people have a lot of methods. Look at the way this thing's gone down. Look at all these technicals out here, 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 and here. Okay, we've got to go and do this. And my answer to that is, don't got to do nothing.
Well, here's my gotta do. We got that big H4 return bar. Well, we're headed back to the open of that bar, so we're looking at somewhere go down to about 125.71. That would be my gotta do.
Yeah, that's certainly attainable. That's only about 27 pips away.
Yeah,
at least on my chart.
Yep.
If my arithmetic is right.
So that's what I'm looking forward to. Okay, we took out yesterday's pivot, which was 126.23. So we took that out during this move. The weekly pivot's been hit, and the monthly pivot is still open. We had a miss of 12 pips so far.
So that move down was a 52.5 pip move down.
Yeah, my range is at 59 right now.
Yeah, so is mine. Just so in case anybody wants to know the numbers without having to look them up, the hourly earnings stayed at 0.3%, which is what was expected. The employment change was they were expecting 212,000 new jobs. They got 303,000 new jobs.
So they say.
Well, and the thing is, it matches ADP from, if you remember, from Wednesday. So that's pretty close. It matches it pretty closely. And then unemployment rate went from 3.9% to 3.8%. So I don't know what it's doing on your side of the country, but I know over here in Georgia, there are signs out in front of just about every business saying we're looking for help. So, you know, the problem is, I think, in the economy, the salaries that people are being paid is not strong enough to really sustain the amount of inflation that's occurred. But there are jobs there. If you want a job, you can get a job. Just unfortunately, it may not pay the bills because the salaries are not keeping up with inflation. At least that's what we're seeing here.
Yeah, we have 45 pip candle on that release, so I think, you know, looking at those fibs, it needs to probably go about another half of that to the south. So maybe another 22 pips, it'll put us right around that, what did I call, 74 number on that H4 pivot?
Yep. Yeah, I'm looking at mine's that's actually 72.8, but that's just difference in brokers or whatever.
Not pivot, I'm sorry, the
I know what you
open,
meant, the return bar.
The yeah. So let's just see.
I knew what you were talking about
right
before you said it.
Well, we got down to 81, so that was, you know, within the level.
It's within the margin of error, as they like to say. And who's to say that this is just a breath candle here and may turn around and come back down again? Because if it's testing the close of the big drop candle.
Yes, it is.
So if it's not able to get back into that candle, then it's more than likely to drop more.
Oh, I think it needs to go back up to 126 just because. You know how that works.
Yep, I agree. It's a magnet.
Yeah. You know, before we got on the phone here on the video, we were talking, and I was saying how you've gotten really good at these low range days, and you said you just adapt it. You might want to explain that to the traders a bit.
Yeah, you know, prior to this, you know, as the traders know, because I try to be as transparent as I can, at least on these calls. You know, I had, in a period of 2 weeks of basically 10 days of trading, I had 3 pretty bad days where I had losing days where I hit my limit for how much I was willing to lose on a particular day. So 3 out of 10, that's you know, it won't ever come close to even wrecking my account. But at the same time, it was not pleasant. Let me tell you that. Because what that means is that when I hit that, that means that I lose the money for that day. Then the next day, I got to make it all up, and then the third day is when I finally actually make some money for the week. So I was only making money for the third, for basically the third, fourth, and fifth day. So, you know, so it can affect you what your goals are for the certainly for the week and the month. But what I was doing was, when I was taking those losses, and it would work, you know, and it has worked for the last, you know, who knows how much time, long period of time, is I only, on my 1 minute chart, when I'm looking for my triggers off the 1 minute chart, I was only looking at maybe 20, maybe 25 1 minute candles, and that's it. That's all I had on my chart. And what I realized was, you know, I'm not going to change my method. There's nothing wrong with my method, because if there was something wrong with my method, I wouldn't be able to come back and win and make up, you know, and actually still be positive. So there's nothing wrong with the method, but I needed to, you know, basically adapt a little bit to the current market conditions. What are the current market conditions? Well, we're sitting in a market that just doesn't want to move. You know, it's very, very compressed. It's just not moving very much, which tells me that until that spring gets released and this thing breaks out of this, what it means is that there's not very much momentum, which means that if I'm looking to go and make, 3, 5, 7, 8 pips or something like that, the likelihood of it happening gets reduced. And the second part of that, and I think this is the most important part, is when you would hit an area, flip-flop boxes, generally speaking, when you hit a flip-flop box previously, what it would do is it would go up and it would bust through any type of minor support or minor resistance. It would actually break through those areas. And when I say minor support, when I'm talking about some type of little resistance or some type of little support that gets built up on a 1-minute chart that may not even be seeable on a 5-minute chart, certainly not seeable on a 15-minute chart. Well, what I noticed was that it was having difficulty getting through those areas. And what would happen is that it would hit that area, turn around, go back the other direction, and the next thing you know, I'm taking a loss. And every one of the losses I was taking, I wasn't taking big losses. I was taking lots and lots of little losses. So what I decided to do was I opened up my chart and stretched my chart out a little bit, compressed my candle size a little bit. So now I can go and look at about 90 of those candles. And then what I'm doing is I'm looking at the chart and saying, aha, here's an area where we hit some type of, I'm gonna go and create a new term here, a micro resistance area or a micro support area. Basically something that, again, that shows up on the 1-minute chart, but you can't see it on a 5 or 15 or certainly not a 30. It just doesn't show up. And because of the way the market's moving, it doesn't get through those areas. It likes to bounce off of them. And so now what I like to do is I wait for my flip-flop boxes like I always do, but I try to go and find ones that occur after it's broken through those areas, or the flip-flop happens far enough away from one of those areas it's got something to run to. And I look to go and take my money off the table when I hit that area. And that slight little change has meant that every day this week I've been able to go and by the time I'm done trading, I've got almost as many pips in the bank as what the daily range is up at that point. Now, like right now, I have good grief, I gotta look it up. I don't recall. Right now, I've got 19 pips in the bank, and when I quit trading, because I made gold, when I quit trading, there was only 26 pips, 34 pips for the day. Well, getting that many pips on such a short day, that's not too shabby, and it's just riding this thing from one end to the other end, because the market's still moving. That's the reality, is that the market's not shut down. It's just that it's moving, going, what a lot of people would call going sideways. Well, it's still moving up and down as it's quote unquote going sideways. And that's how I've adapted to just take advantage of that. And so what does that mean? It means that, sometimes you get in a trade and, you're only taking a pip where normally you were waiting for 3 pips. You just have, and you're being much more selective with your trades.
Yeah, because your number of trades per day has decreased by about, I'd say about 80%. From
Probably,
when we used to do like 50 trades or something, when I used to call you an addict.
Yeah, exactly. Well, to give you an idea, I got the 19 pips. I got my trade report up now, finally. I had shut it down, so I had to go restart. We had 19.2 pips for the day, and I've got a whopping 5 trades.
Yeah. And you know what? We're just about out of time. Holy cow. So, let's just see here. So for the week, let me see. Where's a good weekly chart? For the week here, we've got 144 pips at the 50 percentile. We broke out of the previous high 16 pips, the previous low 46 pips. Off of the high, we've retraced 86 pips for the red rats and 57 pips off the low for the green rats. So, fellow traders, have a fun and safe weekend, and always remember, never forget, it's not what you trade, it's how you trade it. So drain the banks. This is TheRumpledOne, over.